Hello, everybody, and welcome to the second episode on how to trade from zero with the bit blonde. Let's get straight into the video. But before, I'll just do a quick disclaimer. None of this content is a financial advice. You must do your own market research. As always, I just want you to understand something. I'm going to drop three free classes on how anyone can start trading from zero, and the first was about trading. What is trading? We've always been trading, and what is long term, short term, and so on. Okay, so if you haven't seen that one, it's extremely important that you go back and watch that one. And if you're not subscribed, by the way, hit the like button and subscribe to this channel. However, guys, you need to understand something when it comes to trading, when it comes to investing. You need to be willing to do the boring work, because it's all about the very boring repetition and repetition and so on. So unfortunately, it's very technical from now on. We'll try to make as dynamic as possible. But unfortunately, when it comes to the market, you get into this level, you have to go to the screen. Is not much to do. So today we're going to uncover the fundamentals and what are they, how you can apply those very basic steps and actually learn how to trade. And now I've been trading for almost 7 years, and one thing I can guarantee you, I removed all the indicators, I removed everything, all the unnecessary crap from my life. I don't even use a Fibonacci, okay? I am a support resistance trendy gal. That's all I do. Okay, it's very simple, but loads of passion and technique inside. And here is the main thing: if you want to be a trader, if you want to be a truly trader, you need to understand the waiting period. I know the market is crashing. I know we might face crisis sooner or later. I even made a video about that, to be that kind of, oh, I warned you. No, but I literally told you few months ago here on the previous videos that we might face a crash. And even if it's not this year, it will be next year or the following year for sure, because the last crash, the bad one, was in 2008. And at some point, the entire financial bubble will crash, okay, including crypto, forex, and so on, S&P 500. And also, you need to understand that those markets are very correlated to each other. I'm not talking to any long term trader today, and I'm talking about those who want to enter and exit, because honestly, it's the best thing to do during moments like now, during uncertainty. It's the best thing to do. You don't have to be on the wishing list on a buying side forever. And as I mentioned, sooner or later, the entire financial bubble will crash. Eventually, face a bear market, and that is totally fine as long as you know how to enter on the downside and exit and accumulate and buying again. So this is how it works. It's a cycle. People make money, reinvest into projects, into businesses, into whatever you might please. But one thing is true: you need to learn how to navigate, and today I'm going to break down for you. So let's get straight into the content with. So now we will dive into the fundamentals itself. Um, as I mentioned, it is a very boring process, and you need to know really if you like to trade. Again, it doesn't hold you from doing other things such as investing, or to learn the skill and run a business and do something else. That is totally fine. And I know a lot of people do that. I do that too. You don't have to be attached to the screen all the time. So let's get into the fundamentals, and I will explain you on the next step on how to pick time frames, stuff like that, because this strategy can be used in any time frame. But of course, you got to go to the daily and to the 4 hourly to analyze and take your own opinion or perspective of it. Trading fundamentals, mastering support and resistance. The cornerstone of the technical analysis: learn to read where markets find the footing and face their ceilings. Thoughts on Cause the price floor when buying interest stop downtrends. The demand outweighs the supply. So the support, in a very different example, it's our floor. Okay. To build a foundation, we need to have a floor. So any time frame will have a floor, will have a support. And the resistance zone equals the price ceiling where selling pressure holds up trends, supply overwhelms demand. So it means the roof, okay, the ceiling. Every foundation needs a floor and a ceiling. That's how you build a house. So if you look into the graph, I'm also going to show you some of the drawing support and resistance I did myself, and you will see there is always a kind of a house, you can call it. Really, it's very, very similar to a building block, okay? And the zone behavior is not exact lines but areas where price frequently reverse to trade psychology. So we also have zones that the price doesn't do anything, and I'm going to show you too. Just understanding support and resistance, you and anyone on the planet is basically fine to trade. You don't have to complicate this. You don't have to go to the extra mile. You don't have to. You just need to do the exercise on finding the roof and the ceiling support resistance, and I will show you what you can do in the next video. How to identify support and resistance levels. Number one, the swing point method. Number two, the moving average. And number three, the psychological levels. Number four, the volume confirmation. So now then, don't worry too much with all this step, because in the next video I will explain you results on how you can draw it. However, the number one, swing point method, mark previous swing highs, aka resistance, swing lows, aka support on your chart. So if you mark that resistance and support, these show where price previously reversed. It's basically marking the price to the next movement. Number two, the moving average. I personally use the 200 EMA period. Some people use the 100, some people use the 50. It really depends. But the 200 EMA periods equals the movement of the period between 200 days. So it's very, very accurate. Sooner or later, always play out. Number three, the psychological levels. Recognize around numbers, 1.20 or 50, or it's just an example. Okay, we will dive into the actual trade very soon, so don't worry about that. I got you, show you how you can spot them and how you can spot volume and so on. By the way, number four, we have the volume confirmation. Validate zones with volume spikes or multiple price touch equals straight matters, and I also agree with that. As soon as you learn how to draw support resistance, you will spot price really. And you will notice that every time the price touch this level, it will probably walk inside the ranges again, or however you call it. You name it, but it all means the same thing. Okay? Step by step trading strategy. First, you have to learn how to mark your zone, aka identify support and resistance. The second step, you need to watch the price action, okay? Look for zone signals, pin bars, engulfing candle, rejection wicks. And I'm also going to show you more about the candlesticks. And if you want, I can give you my personal guide for free. By the way, this is not the guide I created, it's the guide I bought when I start trading. So it's just a book about candlesticks. And if you like, I can definitely share it with you. Why not? The next step, it's the enter with confirmation area. Okay, trade the bounce of support and resistance once the pattern confirms. Fourth step is how you manage risk, and this is very, very important. Most case scenario, people will lose for years, including myself. I did. So do not expect to get multi-millionaire tomorrow inside trading. You got to give the time, you got to learn and how to navigate. Again, it can reduce a lot with the simple strategy I use. You manage risk, you place a stop loss just beyond the zone to protect capital. Okay, it also comes back to the mindset. Managing risk is really a lot more about stop loss, really. Some people don't trade with stop loss. Sometimes I do, sometimes I don't. It really depends. But it's very crucial and important before you enter the trade. It's very important to ask yourself, how much am I willing to lose at this trade if it doesn't play out? So it's a very interesting thing to think, really, because most people they don't think on that way, but me, I'm always thinking like, okay, I'm willing to give example 10% of my entire capital, depending 5%, or sometimes I don't have a stop loss, but I know if the price doesn't respect that area, I'm out. So before you enter, you need to know what exactly are you willing to give to the market in case if the opposite plays out. Of course, you need to know how to take profit because that's the main thing. Some people, even here on YouTube, they'll be always telling you to buy, 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 buy. They don't teach you how to sell. And in the markets like we have at the moment, if you are attached only to the upside, if you are attached to the price up and up and up, you're going to lose a lot of money. So you need to know about support and resistance, and then you will be able to make profit also from the selling point, which is very, very crucial in case if we hit your next price or something this year, you can make a lot of money just from selling, selling, selling. However, the take profit, the last step just to write off, the take profit equals the exit near opposite zone when the reverse signal appear. So it's very, very easy and practical, but that was a very, very basic second step into the entire fundamentals. And again, if you don't understand the fundamentals, you are not able to trade. I know it's a bit boring, but on the next video I'm going to show you how you can play. Some people call it ranges, you can name it, okay, but basically it means support and resistance. And as I mentioned, the price has memory. It's always walking inside support and resistance. However, on the next video, I'm going to show you how you can find them, how you can draw them, and how you can place your first trade. And more importantly, where I trade and where you can place your first trade. Okay, remember, write down all the key points. And if you are willing to be a trader, make sure to be a very strong person mentally to navigate in the opposite from the word sometimes, even from majority of people here on YouTube. It's very important that you learn support and resistance and you find your own thing. Rely on people. It's very important to learn. Learning makes you free. Learning takes you away from the noise. I am personally not attached to the price movement. I've got people texting me on IG, sometimes even here, like in all platforms. Oh, have you seen what happened to crypto? Oh, have you seen what happened to the US stocks? Yes, I saw it. So what? I can also make something else of it. Guys, you got to learn the basics to make sure that you are free from the entire word noise. The market is just being the market. This is the market. The market is doing his job. His job is to take money from people, a majority of the time to manipulate people. And if you understand that, you can make money from it too. And that's okay. So you understand that. Make sure you do understand it in order of becoming a trader. Well, congratulations, you just made to the second episode of the masterclass on how to trade from zero. And I'll see you in our last one and very technical one. I'll see you soon. Thank you. Bye.